You think the U.S. is quietly tolerating or maybe even engineering a weaker dollar to possibly reshore manufacturing?
The incentives are such that they kind of have to. There's really no option. The dollar does need to be weaker. I do think there is a engineered plan to weaken the dollar relative to other fiat currencies. And of course, that means relative to gold and silver. So that's why we see the prices of those metals going up. At a certain point, economics turns into an existential crisis for the government of a country. And the United States government is experiencing that right now. The economics on paper can work linearly for a while. And at a certain point, you hit that exponential tipping point. You hit a state change, like when you're boiling water, and the system itself changes. And we're getting very, very close to that right now. It can't go on too much longer. We're seeing a reset back to probably official sound money, which will kind of permanently solve this problem.
This is Little by Little with Andy Schectman.
Welcome back, everyone, to another episode of Little by Little. I'm very excited to have with me Alan Hibbard, the alternative money specialist at goldsilver.com, and this is the time to think of alternatives. Look for alternative forms of money outside of the currency that most people call money. Sure isn't. Alan, good to have you, buddy. Thanks for coming on in.
Yeah, thanks, Andy. Appreciate you having me.
Absolutely. Before we start, I want to I'm a big fan of Mike Maloney. Mike is a gentleman in this industry, and I want to tell just a real quick story about what kind of a guy he truly is. And it spoke volumes to me and made me realize that we're all on the same team together. When Mike came out with his book, his best-selling book a couple of years ago, my father, who is the Miles and Miles Franklin, albeit retired, he and I started the company together 36 years ago, this February. And he called me up one day and he said, Andy, this new book is fantastic. I've ordered it for everyone in the company. I'm sending everyone in the company a copy. And he sent Mike a letter. For some reason, I guess Mike saw it and thought he replied or forgot to reply. But about 2-3 weeks ago, I get an email from Mike, my dad and I do, saying, I am so sorry. And this is a year or two ago that it happened. He said, I just realized I never replied to you. And I want to let you know how much your letter telling me of how you appreciated my book and how you sent it out to all your staff and all the brokers at your company really made a profound impact on me. And I just thought to myself, well, that's a good dude. That's a very good dude. He could have just at this point said, hell with it. It's been so long he probably forgot. Instead, he sent an email. And I want to just give a shout out to Mike. Not only is he one of the good guys, and that certainly was been made very clear to me through his actions, but he's also someone who's been putting out fantastic information for a very long time. So I'm happy for you that you get to partner up with someone who is one of the legends in the industry. Please give him my regards. And again, I'm very much looking forward to having you here today, Alan.
Well, thank you, Andy. I will absolutely pass that along. That's a great story. And I'm so thankful to be working alongside Mike. He is a huge hero and role model of mine and mentor. So it's an unbelievable privilege. And I'm happy to report that he is the same guy off camera that he is on camera. So there's a lot of stories like that. He's just so full of integrity. It's just absolutely amazing working with him. So I will absolutely pass that along for you.
Yeah, man, you don't get to be around as long as he has without being honest and having integrity and not without being a good guy. So thank you for doing that. And I guess we'll just jump right in. And I guess I want to start with the big picture, Alan. A strong dollar makes exports expensive and U.S. labor uncompetitive. And I think if there's any nobility in maybe what Trump is trying to do is to reshore manufacturing. And with policymakers questioning King Dollar, that would have been the knucklehead Jared Bernstein dethroned King Dollar, and White House Vice President Vance writing on White House letterhead that Triffin's dilemma is actually a problem for the U.S. now because of the evisceration and hollowing out of the manufacturing base. And the Genius Act, tying stablecoins to Treasuries for synthetic demand for the Treasury. My question to you, first question, is you think the U.S. is quietly tolerating or maybe even engineering a weaker dollar to possibly restore and reshore manufacturing?
Yes. The short answer is yes. I definitely think they're doing that because the incentives are such that they kind of have to. There's really no option. The dollar does need to be weaker, and this is part of Triffin's dilemma. And it also happens, we see it with cryptocurrencies, which is kind of funny. There's that sort of tension about you issue all the coins to the founders, but then if you want anyone to use them, you have to sell them into the market, but that puts downward pressure and downward value on the coin. So there's that constant balancing act. The same thing happens domestically with a fiat currency. And of course, the same thing happens globally when you have the world reserve currency. So that's the Triffin dilemma. So yes, I do think there is a engineered plan to weaken the dollar relative to other fiat currencies. And of course, that means relative to gold and silver. So that's why we see the prices of those metals going up. We do see central banks acquiring gold like never before. And at a certain point, economics turns into an existential crisis for the government of a country. And the United States government is experiencing that right now. You know, the economics on paper can work linearly for a while. And at a certain point, you hit that exponential tipping point. You hit a state change, like when you're boiling water, and the system itself changes. And we're getting very, very close to that right now. It can't go on too much longer. It's definitely an existential threat to have certain kinds of manufacturing inside our own borders. So they're definitely doing that.
Right. I think that's important to do so with AI taking 50% of entry-level jobs in the next few years, with 60% of the country with no college education. We don't make anything anymore. There is nobility in realizing that as a country, you must not be reliant on the world for your manufacturing. And I'm glad you see it that way. This has been something that's been on my mind for a very long time. And I think that also sets the stage for my next question, which is how private players may be reacting to this. And is there really this private entity, or is it commingled with the government? What I mean by that is Bo Hines, Trump's crypto czar until August, is now the CEO of USA Tether. And Tether is taking U.S. Treasury yield as being backing the new stablecoin in the Genius Act and converting it into gold and Bitcoin, the very assets that rise when the dollar weakens. Is this more diversification, or specifically, do you think Tether could be front-running and, in fact, let's just say accelerating U.S. policy and in the process undermining confidence in the dollar to create this weakness in the dollar and perhaps even to have the dollar depreciate or devalue underneath rising Bitcoin and rising gold?
Yeah, it's a good question. And I haven't studied the mechanics of Tether so far that I would claim to be an expert at it. But what I can say is that in general, when you know that the dollar is going to get weaker over time, and it's a question of do we make it even weaker deliberately, or do we sort of let it take its own pace? There's a few ways you can react to that as a private player or as a competing government, for example. You can try to accelerate it yourself through various means, and it depends how large of a player you are. Or, if you want to catch butterflies, you don't you don't build more nets. You build a garden, and you let the butterflies come to you. So, as a retail investor, if you imagine the smallest guy in the game, if you know that the dollar is going to get weaker, you can buy hard assets like gold, silver, or Bitcoin and just wait, and it will come to you. You don't have to do anything. You don't have to convince anybody. You don't have to write letters to Congress. You don't have to set policy. So I think there's a combination of many different actions that players are taking. In the case of Bo Hines, I honestly don't know, so I probably shouldn't speculate. But it almost ceases to be a meaningful distinction if Bo and Tether and whoever he's working with, if they know the future and they know that it's inevitable, they're taking a position, whether they're causing it or receiving it. It's almost less important than just stepping out and seeing what the trade is going to be. So I'm not sure, I guess, to answer your question.
Well, I think to your point, information is just as valuable as money. We're seeing and have been the central banks front run this gold run for the last 5 or 6 years. And kind of leads me to my next question. We're seeing record physical deliveries on COMEX and shrinking LBMA inventories. To me, that looks more like sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20. Citing again, they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25, 25, 25, 25. Stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this, the most well-informed traders in the world, seem to have known this was coming. And I guess my question to you is, with all of the record deliveries on COMEX, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold, or even partially back treasuries and restore global trust, as Judy Shelton has told me twice now, once to me and once to Michelle McCory on this show, that on July 4th, 2026, she says, and has publicly been saying all along, that she believes Trump will tie the back end of the Treasury market to gold. What that would say to me is, yeah, you can bring back manufacturing with no upfront borrowing costs, where the redeemability is in gold in 20, 30, 50 years. She said they'll even make a 50-year with the Stablecoin Act running the front end of the market. Do you think gold is being reintegrated into the system here in the States, possibly, and maybe even across the globe as a settlement system with the BRICS nations? Big question, but really what I'm saying is gold now transitioning into the monetary system by the massive inflows we see coming into the United States, or is it just simply arbitrage and tariff threat?
I think it's more of the former. I definitely think that we're headed towards a new monetary system. You had Secretary Scott Bessent say that, he used to have a fund. People would call him a gold bug. He loves gold, and he thinks that a new Bretton Woods is going to happen in the next 4 years, right? He said this right before Trump was elected, and he wants to be a part of that. So that's a new monetary system. He wants to be a part of it, and he likes gold. You also have Trump saying that, there's something nice about having the dollar backed by gold. I kind of like that idea. So, okay, fine. There's a lot of clues that suggest this. And to your point, Judy Shelton, I don't think she would be saying so confidently that Trump is going to issue gold-backed bonds if she didn't know more about that and if it wasn't being discussed, very, very seriously. So there's always a reason it may not happen, or maybe the timing is off. But I think we can take that as at least a very strong intention by the administration to move in this direction. And to me, that's sort of the key indicator rather than the specific metric it takes or the specific date of launch. So yeah, if we see that, and then if we look globally at central banks, we've seen a sort of right sizing of the gold to GDP ratio of a lot of European nations. And this is over several years. So some nations are actually selling a little bit of gold if they have too much relative to a certain debt to GDP ratio. Others are accumulating, and so they're sort of lining up. It's kind of amazing. I learned about this through a Zero Hedge article a couple years ago, and it's continuing in that path. Of course, China is vacuuming up gold all over the world. It's not only the number one producer of gold, but also the number one importer of gold in the world. That's very unusual for a commodity. So central banks are absolutely grabbing gold. They're right sizing it. They're preparing for some type of new monetary system. And it's probably going to be backed by gold. It's not going to be silver. It's not going to be Bitcoin. It's going to be gold. And so whether we get that in 2026, I don't know. But what that signals to me is I got to get my gold ahead of time and then just wait for them to sort of, hash out the details. So pretty simple trade.
Yeah, I agree. I think, until the central bank stop buying, the bull run in gold is certainly alive. I agree with you completely and totally. You mentioned Bitcoin. One of the reasons that I'm so thrilled that Michelle McCory is here now is because one of the things that I have found particularly distasteful, regardless of my opinions on Bitcoin, is the concept of divisiveness between the two camps, the mutual exclusivity. I admire that about you and Mike, in that I know Mike is someone who believes deeply in precious metals, but has an opened enough mind to look at the other side. I don't think you ever grow unless you listen to other people's viewpoints. I am not saying that I am someone who advocates for Bitcoin. But what I am saying is that the communities should be, I think, united rather than divided, as the message that we focus on is largely the same. In fact, I was looking at your X page, and there was one comment where you had commented on, the guy said, Bitcoiners know Bitcoin better than gold, and they know the reasons to own gold better than the gold bugs do. Now, I don't know that I agree with that or not, but what I'm saying is that largely we see the world through the same lens. Choosing the vehicle, one that maybe focuses more on profit and the other on preservation, well, to me, that sounds like a marriage made in heaven. I guess all I'm trying to say is that I think that it's a mistake to ignore Bitcoin every bit as much as I think it's a mistake to ignore gold and to poo-poo it. And I think learning from people like yourself about Bitcoin's role is important. One of the reasons I wanted to have you here and ask you, and I guess here is the big question. It's unequivocally known that Tether is stacking Bitcoin alongside gold. To me, and I don't, I signal out Tether because they're backing, largely they will back all Bitcoins with U.S. Treasuries. In fact, they're already compliant to the Genius Act, and in backing it with U.S. Treasuries, they get to keep the interest that is accumulated. They can't give that interest back to the stablecoin holder. With it, it appears as though, with the $8 billion in gold they have already and their attendance at the Beaver Creek Mining Summit, they're going right to the miners, and they're also buying Bitcoin. They own a lot of it. So to me, that feels like a signal. It's not just a hedge. And if sovereigns begin accumulating Bitcoin, we haven't seen a lot of that yet, but again, you got Senator Lummis from Wyoming who is advocating for this. In fact, revaluing gold next year, part of the executive order talks about revaluing gold, selling some of it off to buy Bitcoin. Regardless how people feel about Bitcoin, my question to you is, could it become a tool to recapitalize balance sheets or maybe even help offset the United States debt if companies like Tether are accumulating it through the synthetic demand accumulated through the movement of money on the Genius Act? Look at Bo Hines connected to this system. Could this all be part of recapitalizing or even paying off the $38 trillion in debt and the $175 trillion in unfunded liabilities? I guess is what I'm kind of getting at.
Yeah. Okay. So a lot to unpack there. Let me actually address the gold versus Bitcoin thing first, and then let me turn to like how you use the assets to recapitalize the balance sheet. So I totally agree with you. I think that the gold and Bitcoin communities would be so much stronger if they partnered up. Like, this is a dream of mine. It's like, if I could have one wish in the world, in the short term, I guess, it would be for Bitcoiners to welcome the gold bugs and vice versa.
Right.
So I think if I could speak as a Bitcoiner for just a moment, I've held both assets continuously for 10 years. So if I could speak as a Bitcoiner for just a moment, I would say we forget how weird we are. We're so weird. We adopt new technologies. We question everything. Like, we'll ask questions like, what is money, and contemplate it for 10 hours. We do really weird things, and we can't expect the other 99% of the population to get behind this weird technology wrapped in weird layers. It's just not politically viable. It's not palatable to the general public yet. It'll take a couple generations until people are comfortable with this technology and the fact that it could be a money or it could be a store of value. It's just a bridge too far right now. So Bitcoiners would be way better off if they supported a gold standard, an official gold standard in the world, and we actually use sound money. And then they can continue to own Bitcoin on their own if they think it's a superior form of money, it's thermodynamically better than gold. Whatever the argument is, you can continue to own Bitcoin, as I would under those circumstances. Conversely, I think a lot of gold bugs dismiss Bitcoin either because you can't touch it or you can't use it during a power outage, or pick your objection because of how weird it is. And I think a lot of gold bugs refuse to consider the possibility that money could be digital or could be abstract. So I think if we work together, we could get a lot more done. We could end the fiat system, which is the most important thing. And end the systemic theft, end the endless wars, and so forth. So that's kind of the main thing. I wish we could all come together. That's that. And so getting back to your question about how do you use these assets to recapitalize a balance sheet, could Tether be doing it? Ultimately, the way to keep it simple is to just realize that everything boils down to energy. Everything is energy. Food is energy. Music is energy. Clothing is energy. Our video is energy. Money is energy. It's economic energy, and so forth. So if your energy is leaking out of your life because it's currency, okay? Currency. I work hard to acquire this, and then my energy disappears because someone else can print these out of thin air. If that's the problem, then the solution is to use a form of money that doesn't leak energy. So whether it's gold, silver, Bitcoin, or something else that gets invented, that's fine. And the solution is so easy. You just acquire the thing that's not going to leak energy, and that's it. Everything else is details. So do you leverage this? Do you, whatever? I mean, do you buy Treasuries, which are future dollars? Do you, promise to pay an ounce of gold later, and all these sophisticated things? That's all a way of complicating the issue. You just have to hold something that doesn't leak energy. And then at some point in the future, when you want to do something, your balance sheet will be healthy because you have that energy. You have the energy you earned years ago, and you still have it. And this is true if you're an individual, a company, a country like the United States. And so when we think about having 38 trillion in debt, it's because we've leaked our energy all over the place. We've spent money we didn't have. We've leaked energy we didn't earn. And now we owe it. We have this giant energy deficit. And so how do we get out of that? Well, we have to actually earn our way out of it one way or another. And when we earn our way out of it through actual growth, we should be storing it in something that doesn't leak energy, gold, silver, Bitcoin. And when we do that, all of the sudden our balance sheet will be healthy. So that's kind of how I would summarize it. Just use honest money and earn it. That's it.
Right on. I like that. And I guess when you put all of this together, the dollar crumbling fiat system, gold, Bitcoin, new trade systems, I mean, to me, it points to a much bigger shift. So stepping back, it seems like we're heading towards a weaker dollar policy to reshore manufacturing, stablecoin regulation to create synthetic demand for the U.S. Treasury. You could argue bring us into the digital surveillance state. That's a topic for another discussion. You got Tether's moves, and Bo Hines, who was just on the administration, kind of like Stephen Mirren being an advisor to Trump and now the architect of the Mar-a-Lago Accord, which advocates for a weaker dollar for manufacturing purposes, now at the Federal Reserve. These lines are being blurred. You got BRICS building new trade rails, and gold and Bitcoin moving into strong hands. And when you look at the moves by the BRICS, largely through the expansion of the Shanghai Gold Exchange into multi-jurisdictional vaults, trading with one another outside the dollar, settling imbalances in gold. Are we watching a coordinated reset, or are we watching, to your point, you mentioned that, a reset or some sort of a new system, or are we watching a collision where the market, maybe like you mentioned, where we could get rid of the fiat system, where the market itself decides what money comes next? What do you think?
Yeah, there's definitely a couple different angles that we could approach an answer to this question. So from an individual's perspective, somebody like me, I don't hold public office. I can't really influence policy. So the only thing I can do is choose the best money for myself. And of course, I do not choose dollars. I choose a combination of gold, silver, Bitcoin. I own all three. that's fine. That's pretty much where it ends for me. And whatever the official monetary policy is matters less in terms of my financial portfolio. However, if you're a sovereign nation and you're trying to tax your population and not crumble and not have a revolution on your hands and not have your military become overrun by a foreign military, you have a completely different set of incentives and a completely different set of resources that you're trying to manage. So basically, each one of these countries doesn't want to lose its power. It doesn't want to lose its ability to control resources. And unfortunately, they all have a fiat currency, and they're all headed to zero. And when it goes to zero, they lose their power. So they want to weaken their currency enough to boost exports and keep manufacturing within their borders. However, if they weaken it too quickly, they lose all their power. Their citizens revolt, and they cease to be a government at all. So that's sort of the balancing act, and it only happens because they're using fiat currency. If they use sound money, this would not be a dilemma for them at all. They wouldn't have to worry about how strong or weak an ounce of gold is because they wouldn't even be able to control it themselves. The free market would do it, and it would always be finding that balance without central policy. So are we seeing a collision or a reset? Both. We're seeing both. We're seeing a collision of these competing fiat currencies that probably shouldn't be there. And we're seeing a reset back to probably official sound money, which will kind of permanently solve this problem. So I do think we're going to get a reset globally. There's all kinds of questions about how long could such a thing last before someone cheats the system. It's a topic, maybe it's a topic for another day. But we are getting a reset. And at the same time, we're seeing a lot of collisions along the way. And that's the obstacle to getting the reset. So it's really both.
Well, Alan, you're a good dude and someone I hope to run across, or hope our paths cross, and sit down and do this properly over a beer or something and talk about the world. I like your open-mindedness. I guess that's really what appeals to me, is that I've been trying to connect the two communities for a very long time, also going all the way back to Andy Hoffman 10 plus years ago, about 8 years ago, when it was his idea, and I thought it was great to connect the two communities. And I like that your open-mindedness has led you to the same idea, that we're all fighting the same fight. We all look at the world in many ways in a very similar fashion, and the divisiveness is counterproductive. So with that being said, you have my respect. And working with a really good dude in Mike, again, my respect, and hope you guys continue to do what you're doing and get your information out there, which leads me to, before we close, to last question. And that's to tell us about your new 6-part series. I watched part 2 yesterday. It was fantastic. Tell me about what inspired it, what it's about, and how does it connect to the big themes maybe we've been talking about today. What do you want people to take away from your new 6-part series? Why don't you tell us a little bit about it?
Yeah, well, thank you, Andy. Really appreciate it. It's been great sitting down with you today. The 6-part series is called Hidden Secrets of Value, and it's a tribute to Mike Maloney's Hidden Secrets of Money, which I saw 10 years ago or so, watched many times through. It's absolutely fantastic. And so really what I wanted to do is, as I was learning about money, currency, the dollar, value, what is a store of value, what is intrinsic value, and is that a real thing, or is it an oxymoron that doesn't exist? I had all of these questions that were really fundamental, and I looked to the Mike Maloneys of the world and all the other heroes that I had that helped me along the way, and I couldn't find a satisfactory answer. And I would notice in videos or podcasts or interviews or books that I wanted a more accurate, helpful definition of what really is a store of value. Like if the price of gold goes down today, does that mean gold wasn't a store of value today? Well, that's kind of silly. That doesn't make any sense. It's not a store of price. It's a store of value. So there has to be something different to it. So I had all these foundational questions: intrinsic value, extrinsic value. How can I tell if Bitcoin has any value at all, or if I should just dismiss it? And what about all the other cryptocurrencies? And what if something new gets invented a few years from now based on quantum whatever? is that thing going to be valuable, or how can I tell? So I've been trying to build a framework that's based on first principles, and I use the lens of energy and physics and entropy and friction, and I identify what the real problem is, why we actually want money. It's to keep our entropy low. And so I put it in a 6-part series. It's only about 90 minutes of content, so you'll be able to binge it once all the episodes are out. Episode 3 is coming out probably this week, and episode 4 is the one I'm most excited about. That's the physics of money. That's where it all comes together. So if anybody's interested in understanding first principles of why something has value and what value is and the difference between money and currency, you got to check out this series, and I hope you learn a ton. And if there's any follow-up questions, I'm sure there will be. I'm going to do live Q&As on our channel for anyone who wants to ask follow-up questions.
Right on. I think that's fantastic. Yeah, and Mike's the hidden secrets of money is a must-watch. Also, I think for kids especially, you can never be too young to understand what money is, what currency is, ways to protect your purchasing power through understanding the difference first and foremost. Just to say thank you for taking the time to do that and put that out there for free for people who understand. That's fantastic. This was great. I hope we can do it again. How can more people find you, your work, what you're up to, the hidden values videos? Where's the best place to find you?
Yeah, you can find my personal stuff on Twitter or X at Alan Hibbard. And of course, everything I do for Gold Silver is on the Gold Silver YouTube channel. So it's just Gold Silver or goldsilver.com. You can find everything there. So thank you so much, Andy. Really appreciate it.
Yeah, man. Absolutely. Absolutely. All the best to you and yours. Look forward to doing it again. And thanks for tuning in, everybody. And look forward to seeing you next time.